Hi everyone, this is Eddie. I haven't done a market update video for a while, so just been crazy busy. So since a lot of people have been asking me what to do lately in this crazy market, I thought to do a quick update on how to trade this market. So this is one of those scenarios where there's no money to be made trading the longer time frames or swing trading. So because there's a lot of chop back and forth, so it doesn't matter if you're going short or going long. You could get caught in the whipsaw in the markets, right? So but it is a day trader's dream to have this type of volatility. So that's why I've been concentrating a lot of my time in right now, and a lot of my students are learning how to do this as well. And since November, I've been trading. I've been doing day trading only. So I did try a few swing trades, even with really good setups, and they get broken easily in this type of volatility. So the only sectors right now that are working are in the commodities or in the utilities, right? Because everybody's looking for safety. And the stocks that are working really well right now are actually oil, copper, and gold, right? So if you do want to make a trade, maybe stick to those sectors for now and just follow the trend till the trend gets broken, right? If you really need to trade. Otherwise, just stay cash. If you're trading, stay cash. Look for the setups, look for the market to find the bottom, and then start going into trade, right? So today I'm just going to give you a quick update on the S&P 500. That's the chart I mostly concentrate on. And we are currently still in a downtrend. So it is approaching to the trend line right here. So you can see right here, we're in the down channel and we're approaching to the upper part of this channel. Now, with this market going down like this, and you see how right here, the market rallies really hard into that resistance. When it gets rally hard into resistance, they tend to fall just as fast. Right here, we tested this resistance area twice, right? So in this scenario right here, we are consolidating again like this, right? So when there's a consolidation like this, you want to focus on the range break, right? So this is the range right here. So if we actually consolidate into the resistance area and we don't break below this low right here, chances are we could potentially break above this and above the 250-day moving average. If we break above this, we're going higher, right? Where are we going to go? Well, we have to look at the previous peak areas, right? So we're going to go maybe up here, or even new all-time highs. So it really depends on what's going to happen in a couple of weeks when we have the Fed meeting. So I think the chart is going to consolidate into that meeting, and then we'll pick a direction, right? So what we're going to focus on is this range right here. Where is it going to break? If it's going to break above here, most likely we can test it 200 to 50 and then this high right here, right? If we test this high right here and we actually could break above it, I'm pretty sure we're going to work and try to test the highs again, right? If we break down, we're going to look for the support area to be around this range right here, the low of this candlestick. You don't want it to go any lower than here, right? If we go any lower than here, then we are going to drop down to 4,000 or so, right? We're going to go drop down to around the areas of this high right here. So around this range. This is our next major support area is in this trading range. So you really want to stay above this low. If we do break that low, expect we'll come down to around this area. And around this area, this is where I'm going to start buying if it does come down to this area right here, right? I'm either going to buy down here or I'm going to wait till the market actually goes back above the 50 and the 200-day moving average. If it goes back to 50 and the 200 and it actually holds this time, then potentially you can start deploying some of that cash and start moving, right? And start trading again. As long as the setups are good and the index finally stabilized, that's when you can start trading. As for right now, I'm still just day trading. You see these ranges of these candlesticks? There's a lot of money to be made day trading, right? I just launched a day trading course, and a lot of people start practicing on their paper accounts, and some of them even deploy some real money accounts. And it's working in this type of environment because there's a lot of money to be made in these ranges, right? And if you know how to trade these ranges, you can make a lot of money in a day, right? I'm making more money in a day than I did swing trading for a few weeks when the market was like this, when it's consistent, right? Consistently small, right? It's easier to pick direction and it's easier to trade the longer time frames. But look at the size of these candles right now, right? This one candle right here is almost like a week's range of what it was before, right? Imagine you buy at the bottom of this range and you caught it all the way up. You just made a week's money in one day, right? That's how good day trading is right now. So that's pretty much what I am concentrating on. If the markets start breaking above this range right here, I'm going to start looking for where we beat up stocks that are high quality and has earnings, right? Stuff like like PayPal that's been beaten up quite bad, right? So I do have a small position in PayPal, and I'm looking to add to it once it finds its bottom, right? Right now it's still just a falling knife. So you want to wait till the market actually stabilizes, and then you want to pick the companies that's been drop off significantly and potentially reverse on the upside, right? So that's what I'll be trading, and I have them on my watch list, and I'll be looking for a lot of these high growth names that were very strong during COVID, and now sold off quite a bit near the end of the COVID cycle, right? So they will eventually come back, especially with a company like PayPal that has a very high revenue growth and are profitable. These are the type of companies you want to concentrate on, not ultra high growth that has no earnings, right? Although they could perform well, but in this type of environment, I would stay away from those and concentrate on companies that actually make money, right? And if you look at the MACD and the RSI right here, you see how we're making lower lows in this stock, but we're making higher lows on the MACD and as well as the RSI. Well, that's a bullish divergence, right? Meaning that potentially we're finding a bottom pretty soon, and potentially this is the bottom area, right? So if we stay above like this range right here, we potentially will be breaking out, and it's going to be highly dependent on what's the Fed's going to do in the March meeting coming up in another week or two, right? So pay attention to the price action towards that meeting and see what happens right after that meeting, right? If we break out of this range, we potentially could run, right? So it could run fast, right? Because the harder they fall, the faster they recover. Right, it's a pretty sharp sell-off right here, so potentially we could rally all the way back up to this high right here pretty quickly if the Fed was dovish, right? So that's what we'll be concentrating on and focus on. That is that meeting, but as of now, we're going to just day trade till that day comes, right? There's really nothing to trade. I was looking at some energy stocks I might get into. I'm in a little bit of it, but I saw most of it rallying into the highs, and I thought it would have a significant pullback. It's still haven't pulled back, right? So, and it's continue higher. So I still have a small position, and but I'm not looking to add too much into it till it pulls back into the support, and then I'll buy more, because I think energy stock might stay high with $100 barrel oil. If we stay above $60 barrel oil, these energy stocks can actually continue to go higher in the next year or two, right? Because they do print money when it's above $60 a barrel, and we're trading at 100 right now. So most of those companies actually will be they could actually buy back all the shares with the profits they make in like 2 or 3 years. That's how good it is right now for them. So so I'll be looking at XLE. XLE right here. See how he's broken out and it's continuing higher. There is a target range that I have right here in about $80. So if we hit about the $80 range and make a 50% pullback, that's where I want to re-enter into the market, into the index. As you can see, our side right now, we're in the upper part of the relative strength. I think there's still a move up there, so it potentially can hit 80. So if you really want to trade this, you want to be very tight on your stops and manage the risk, right? So if you want to actually try to catch this, I think there's still a little bit of room run, but I would stay out till the next pullback, right? I would like to see this pull back into a 50-day moving average, or at least try to catch up to it, but I don't think it will. You see, if you see a trend, we're quite far away from the 50. So that means there's very high momentum in the stock, and most likely it's going to go parabolic, right? So if it goes parabolic, too far away from the 8, if you're already in it, you want to take some profits off the table and then see if it holds the 8 and 21 going forward. Right. If you actually pulls back to 20 and holds, it could still go in the next wave up. So I'll be looking for it to pull back to the 20, and then I'll see if I'll buy some more oil stocks at that time. But as of now, I only have a little bit of it. I might add a little bit more if it actually continues momentum, but I'm keeping everything small. And if I am trading, I'm keeping very tight stop on the stocks, and I am only trading stocks. I'm not trading options at this time because options right now is just crazy, right? You can't, it's very hard to make money with trading options in this type of environment unless you're selling very far out of the money spreads, which you could get whipsaw as well. So I'm just concentrating on stock, which is easy to control and easy to take my stops and get in and out of the stock very, very quickly, right? So that's pretty much it for this update. I'll try to make more videos. I'll see you guys next time.